Thanks everyone for joining us for our next Ripple Ventures Tank Talk with Saurabh Sharma, General Partner at Jump Capital, to discuss the democratization of data and analytics and machine learning. Thanks for joining us in the tank today, Saurabh.
Glad to be here and very excited.
So just a brief background on Saurabh. As I mentioned, he's a general partner at Jump Capital, where he's been for the last 5 years. Jump Capital is an early to growth stage venture capital firm in Chicago with over 300 million in assets. Prior to that, he was vice president at Lightbank for 2 years and was also at Barclays and Lehman Brothers on Wall Street for a couple of years. On the investment side, he's made investments in companies like IronScale, Fortelix, Logic Gate, Sight Machine, Flashpoint Intel, and Tulip Retail. Let's discuss your operator background, Saurabh. You spent the early part of your career first as a research engineer at INRIA and head of relevance and personalization strategy at Groupon, and then the head of global marketing and operations at Ideal. What were some of the lessons you learned working at Groupon and Ideal that you lean on today?
Yeah, I think a lot of lessons. One, I think Groupon at that time was in a phenomenal phase. This was, I was lucky enough to work with the founders of Groupon at Lightbank, which was Eric Koskowski, Brad Keywell, very well-known entrepreneurs in the Chicago ecosystem. And then when Eric became the CEO, took me along with him. And on the Groupon side, I was basically charged with relevance and personalization strategy, which, if you think of Groupon at that time, and I think still was just immense amount of data and immense amount of scale globally. And to be able to build a highly personalized, call it machine learning and data science-based recommendation engine on real-time relevance, and I was very specifically working on mobile relevance, was just a phenomenal experience, both from the perspective of being in a place to get access to that much data, and then to be able to make that kind of scale, and then along the way, really experience all the pieces around managing this kind of scale of data, building machine learning and data science type models on this scale of data, and then really deploying it at that kind of scale in a global setting. I think it was just a phenomenal experience in a very short period of time. And then Ideal, again, very similar experience. Bought a business, a fashion e-com business of pretty decent size, and then really running and then building the full stack. Completely independent business for us. And we really built the full stack in-house, ranging from marketing to operations, and then managing that team. And that was the time, also another kind of wave of flash sale site businesses which are propping up, and Ideal was a competitor in that space. So just kind of seeing that new business model and then scaling and running that business and then folding that into Groupon's overall strategy. One, gave a lot of insights into, completely, tech stack, managing people, and then more importantly to my job, really building an empathy as an operator towards the people who are actually building these things and the kind of challenges you deal with them.
Yeah, I can only imagine just the amount of data that you were sitting on top of at Groupon that had so much potential, but it was at probably such an early time when, AI and machine learning was still starting to get used. Building those recommendation engines and those personalization strategies must have been like daunting at the beginning of it when you thought to see how much data you were really working with.
It was. We were fortunate to actually have that kind of scale and setup. And I'll tell you, in many ways, we were quite impressed of what we were able to put together and kind of building these stuff. In some other ways, it was a nightmare. Because the amount of data was growing every day. Groupon at one point was selling, 1 billion emails a week at that scale, and obviously significant amount of web properties and mobile properties. And to be able to manage that kind of data at scale, to deploy models, it was daunting. And I think a lot of impressive team. We had a lot of folks came from Amazon and built a whole new Seattle office, a whole new San Francisco Bay Area office, really getting the top talent on data science and machine learning side, and then kind of dealing with this problem. So yeah, just a phenomenal experience.
Yeah, there must have been some amazing talent that came out of Groupon that has been spread across the ecosystem over the last several years. That's probably paying dividends more and more to more younger startups every day.
Totally.
Let's talk about your investment banking and PE background. You spent several years working in the quant trading, investment banking, and PE space in India. How did your time in each of these roles shape your views on capital markets and investing globally that you still rely on today?
Yeah, listen, I think phenomenal, the story to always say a conversation starter when I talk about Lehman Brothers, right? I was at Lehman really at the peak of the time. I joined them in 2004, really top of the market. Lehman was just a storied firm, one of the star firms, especially in the fixed income side, and really at the peak. And then I was in the bond trading desk, and we just had a global dominant position, leveraging again my computer science, and I was in the quant side, so we built a lot of large scale, architectural infrastructure, and then really quant trading automated models. That experience for me was really deploying my computer science background in a real world setting in a very practical manner. This was not some research that I'm doing, which was obviously my plans when I was an academic, but actually putting it to scale on a daily basis. And the beauty of the trading world is you see the impact like daily. This is not that you put some machine learning models and then slowly the world. This is that you put it down and then you see and you're beating the market. So it's almost very instant gratifying in many, many ways. That element of kind of building in a very competitive market and putting it in use, I think obviously a great learning for me. Obviously then having seen Lehman Brothers through the cycles, and then gone through the sort of the downsides. And, I was fortunate enough to be in multiple offices, both in New York and then London and a little bit in Hong Kong. I think that was also a phenomenal experience to have a global view. And really, it was a very macro view because I was on a fixed income side, which by design is driven by a lot of macro factors. So really understanding the economic and the macro and the micro factors to kind of move the markets, that was a very good training for the future. I think ICICI Venture was kind of my small stint pre-business school on the private equity side. And my really aim was to experience the boom in India. When I went there, this was the time when private equity was at its peak in India, and India was just kind of transforming to a very fast-growing economy, very early ages of it. And to be there and then, spending a time for selfish reasons to really experience that personally was also great. I started a brand new team doing cross-border investing, leveraging a lot of US learnings there. And again, one of the largest private equity funds at that time, but then also seeing private equity very differently. Because obviously coming from the capital market side in US, I was used to LBOs and very, very old school financial engineering driven private equity. In India, the debt wasn't really allowed at those levels. It was pure growth equity. So India's private equity was really more growth equity because companies on its own were growing at a clip. You don't need debt to kind of make the kind of returns, which is phenomenal, right? It's a high growth overall company where you can move $100 million, $200 million EBITDA company and still make pretty good private equity returns purely from on operating and organic growth of the business. So I think that very specific view on what private equity means in non-debt related matter was totally different from what I had experienced obviously in US. And then Barclays was interesting. I think it turned out to be the acquirer of my old business by the time I went after business school. So, I went in business school with the idea that, hey, this is a perfect time to be in business school. Markets are down. In fact, Lehman was going to sponsor if I come back to work for them. And then, they disappeared. So I ended up coming back to Barclays, also great job, acquired Lehman, much bigger company. And I was on the investment banking side at this time, more on the M&A, and just kind of got to see the cycle of M&A and what it means. And then obviously that serves very well for me in my job where our portfolio companies are scaling up and then obviously looking at public or SPACs or all these routes and the very good training on this investment banking side.
Those are three amazing places to sort of see the highs and lows of everything that you experience in the investment banking, global capital markets world. First at Lehman, you got to see the absolute explosion of the LBO and the debt markets and sort of how things were actually operating at the highest level, but also getting to be very transactional with everything you built. Startups have this, build and then sell mentality. You got to literally build it and sell it in the same day, which That's is right. Really cool. And then at ICICI, I mean, that is the definition of not using artificial leverage. That's true, natural, organic leverage in their own business with growth equity, which I mean, sure, a lot of private equity guys are jealous of back in North America, that you had the ability to invest growth capital without having to go through the debt markets to get that artificial leverage and see those results. What were some of the investments that you were most proud of that you made when you were there?
Yeah, I think that one of the big ones I was involved was a business called PVR Cinemas, which is the largest kind of movie chain in India. It's kind of think about India as a rising middle class going through transformations. And, you're talking about not using that. That's the beauty of emerging markets, right? Fast growing economies, the BRICS that we talked about. The whole country is elevating. And when you are able to make private equity investments with a very macro view of thinking about what middle class and the moving class is going to use. So they're all start going to cinemas. Everyone is enjoying a new wave of this entertainment and then a completely new way of consuming content. This is obviously pre-OTT and Netflix time. So this investment was a kind of very good kind of captured that wave and then obviously benefited from just pure organic growth at a very macro level and at a scale of a country like India. Yeah,
well, hopefully you're finding some startups that have that organic growth as well. Now let's transition to the venture capital side. So in 2012, you joined Lightbank Fund as a vice president to focus on investing in healthcare services, consumer tech, fintech, and data-driven solutions. What were some of the biggest challenges you faced after moving from private equity and banking to the venture side at such an established firm like Lightbank?
Yeah, I think there's a bit of mindset change, right? I mean, you come from maybe a traditional finance ecosystem. And I was lucky to kind of have been an engineer and an operator a little bit in a different way and kind of in a build mode, even at Lehman. So at least I appreciated the technology aspects of it. But I think the fact that you work in a very large settings on Wall Street and then start comparing to a very scrappy bootstrap type company situations, I think it's a bit of a mindset change to kind of get to that. And you start appreciating the hustle of the entrepreneur and you start appreciating how hard it is. This is the hardest thing anyone will do in their life, to start a business from scratch, from zero. So that's maybe, I would say, the one biggest change that I experienced. Second, I think Lightbank was a unique place under the umbrella of Eric and Brad, where we were kind of building a lot of businesses in-house. And I was involved in really building those businesses. So we would invest early stage, and then we would really incubate a lot of businesses. In fact, I ran 2 or 3 businesses which were kind of incubating ideas. So that was phenomenal because I was getting this build and invest kind of experience at the same time. And then I think the third piece, which was very different, was it takes a little bit of a time for you to learn the venture business from perspective of that you have to say no to a majority of these entrepreneurs. That's a really hard thing as you're kind of running up, because if you come from a traditional world, I mean, everything looks cool. And every entrepreneur, their energy is infectious and they all want to change the world, and you just want to help them with that. And then slowly you learn that obviously that's not scalable. You have to kind of figure out how to, quick filters to kind of say no. And that also is a very different kind of mindset, especially if you're a builder and you're an engineer and you're like, yeah, I get it. This is great. And you kind of thinking at a very product level, but then you start combining it with the market and the opportunity, and then obviously the general venture returns model. But it was a phenomenal training background, right? Because one, Eric and Brad were just seasoned and just phenomenal entrepreneurs, having done this like so many times. And so working with them to understand the operator mentality, having the experience of really building and incubating businesses, and then investing at the early side at the same time, gave me a really good sort of appreciation of what does it mean to be at early stage venture, which is very different from your traditional sort of late stage investing.
Yeah, I mean, I went through the same problems coming from the sell side service provider capital markets world, where everything is a yes. You're always saying yes to finding new deals to work on. But when you're going to the buy side and you're an investor yourself, it's very like 99% of the time saying no is really hard to do. To say yes to that 1%, because everything you want to be a transaction, it just doesn't end up working that way when you have so many things you have to accomplish with that one company to be successful. Were there any companies that are still, your darlings that you stand out for and you have a soft spot for?
Yeah, many. I mean, I think there's one specific company, which is a business called Benchprep, which is a business that actually I was involved when it started. It came out of the time when I was at business school with my close friends, and we won the New Venture Challenge booth. And my 2 good friends, Ashish and Ujjwal, started that business, and I was really involved from day one. And that business ended up, Lightbank funded it. I was not at Lightbank at that time, and then ended up being at Lightbank later on. So it became my portfolio company. And then so, very closely involved in businesses, just a great example of the grit and perseverance of having tried consumer model and totally pivoting to an enterprise model, and then now really scaling well and being at the middle of digital transformation, movement for, education and training companies. So that I think obviously has a soft spot. And then funnily enough, at Jump, we actually led the round for them. And now it's a Jump portfolio company, but I'm actually on the very longevity from my business school to Lightbank to now my current fund. So by definition, that's special. And then, then many other, I think we, was involved in phenomenal success stories. The most recent one, Sprout Social, which is a company that, was funded at Lightbank and just went public, one of the leading sort of social media platforms. Udemy, which is in an education business, which is also doing extremely well. Yeah, there are a few, but I think these 1 or 2, I think, especially Benchprep, obviously, because of the connectivity there.
Yeah, that's amazing. I mean, that one came full circle, not just once, but twice.
That's right.
Back over to you again at Jump. So let's transition to Jump, where in 2015, you joined Jump Capital as a general partner to focus on investments in application software and IT infrastructure. What excited you most about joining the team at Jump Capital?
Yeah, listen, I was an operator. I was, running, my bid at Groupon. Very challenging problems, and the Groupon, was a company at scale where you can just do a lot of stuff. And it was a new age large company where you still had a lot of stuff to build and a lot of stuff to go. But I connected with my partners, Mike and such, just organically. And then, I was thinking about what's next for me. And I was looking at a place where, one, I have the opportunity to kind of build something from ground up and really, shape it. And then really also have the autonomy and then obviously the foresight to and the support to think about areas that we really want to go invest in, without having a lot of traditional constraints of the business. And Jump was a phenomenal setup for that. One, we had just an amazing LP backing structure of a very sophisticated LPs coming from strong sort of quantitative backgrounds. Second, Mike and such were just still very early in shaping this fund, so I had an opportunity to join them in that journey and really kind of build the firm the way we wanted to build it. Third, I think it resonated from the biggest thing for me was resonated a lot on the cultural points. Venture is a very individual business in many ways, and it's a very long bet you take, because you have to be there for a couple of years to really reap the benefits, and you really want to be in sync with your partners there. And I think we're very proud to say that we are so proud of our culture, what Mike and such have set up there, and I think that was a just perfect mix. So that environment where we can foster ideas, we can be open enough to change, we can open to what the market is moving to, and then obviously follow the sectors that are really disruptive, and then go back them. I think those are kind of some of the combination of factors that got me super excited.
And maybe just for the audience to understand sort of the origins of Jump Capital and their connection to the capital markets world and the quant trading side, maybe just give us a brief background on that. Yeah,
so Jump Capital, we are a firm about 8 years old in Chicago and New York. We are backed by a small LP base, traditional GP LP fund, but just have very strong connectivity to one large LP called Jump Trading, which is one of the world's largest quantitative trading firms in the world, a very sophisticated trading business with obviously building everything kind of on their in-house proprietary tech stack, and just have the best talent from a technology and R&D perspective in their repertoire. And that leads us to having a very strong connectivity with them, leveraging obviously a lot of resources and brain power to help us invest in diligence, but also more importantly, support our portfolio companies in significant way, especially in deep tech areas. And I think we're one of very few firms who are able to invest in deeper tech, cloud infrastructure, IT infrastructure, machine learning based, application companies out of Midwest. I think most funds, as you find, are obviously Bay Area and coastal. And I think Jump has done a phenomenal job. And obviously we have immense resources in a very unique way to help these companies. As an example, Jump has its own R&D lab called Jump Labs as part of Urbana-Champaign's computer science department, where we would scope out projects for portfolio companies. And that's just one example of many ways we are very uniquely suited to support companies, especially in this data analytics domain.
Yeah, amazing. So let's talk about that massive brain power and machine learning capabilities. Let's talk about the democratization of data analytics and machine learning as it relates to venture. So, a recent report by McKinsey highlights that by 2030, companies that fully absorb AI could double their cash flow, while companies that don't could see a 20% decline. How would you describe the need to democratize data analytics and machine learning and the potential impact it could have on the economy?
First of all, I think we're still pretty early set up in that ecosystem. I think the need is huge, and the need is huge from many, many ways, right? I think if you see someone who invests so much in AI companies, I've kind of seen the firsthand, the massive advantages that once you have kind of built an AI moat or sort of machine learning moat that it can have on your business, and then obviously on your sort of top line. But in similar sense, I could also see the ones who are not leveraging that and don't have the ability to leverage that can totally fall behind. And I'm thinking about, obviously old school companies, but then also the, companies at the smaller end, the small businesses, the local coffee shop, or sort of small entrepreneurs. In one way, I think democratization can change the world. And if you don't kind of follow that, it can create some insignificant inequality in a very different way, because it's just a phenomenal influence and power that someone can have. And I think it's super important to make this technology available at a mass scale, and put in the hands of everyone, and to be able to uplift, the overall economy in a big way. I do think that, democratization, at least today, is in kind of early phases, and we generally confuse democratization with, the open source movement and so forth. In many ways, I mean, the big tech, being Google and Microsoft and Facebook, they control the data and obviously have the best R&D dollars to spend, and hence they control the intelligence in many ways. And they would sometimes, open source some of the stuff, but that's, they're kind of enabling the tools, but not necessarily open sourcing the intelligence. So I think, they're kind of in a very amazingly advantageous spot today. And I think we need to be doing way more than we are today, kind of opening it up, projects like OpenAI, which are really democratizing this for everyone else. Because by doing that, I think every single piece and from an automation perspective can totally change the landscape for middle market companies and small and medium businesses.
Yeah, I mean, that's a really important point that you make. It's not just the democratization of data analytics, it's data and analytics, because the analytics are the tools, the data is the secret sauce, and a lot of people can't get access to that data to show off their tools and analytics. And that's a really important part. So it's data and analytics that you can democratize together.
That's right.
Yeah.
That's right. And it's very hard to build those data moats. Obviously you don't have the scale. So, you can provide your intelligence out from a tooling perspective and people can start using them, but they're unable to optimize on that because they're not collecting that much data on that side. So I think that it's a tricky balance of how do you truly democratize this? How do you truly make the research available to everyone? How do you truly enable to be playing the equal field? Because if the playing field is not equal, I do think it's going to create some massive shifts of one versus the other in this company. So it's kind of a tricky balance of how do you go attain this democratization in a true sense?
Yeah, I mean, we always joke around at Ripple, like, would you rather invest in a team of data scientists that have no data whatsoever to work with, but they have the brain power to eventually use it, or a team that has tons of data and no brain power to actually analyze it?
That's right.
A lot of people say they'd rather take the data than the actual brain power because more and more tools get democratized.
Yeah, and I think in many ways you think the intelligence piece. I think the general community has done a pretty good job of making that widely available through sort of PyTorch models and the general Python libraries, and even to give the credit, Google's and Microsoft's opening up their cognitive services. The intelligence and the modeling piece of it is really available out there. What people don't have is the infrastructure to actually put the data to use to kind of leverage that, and then in many cases just the ability to have the data or aggregate all that data.
Yeah, absolutely. So over the last several years, we've seen a massive shift to business intelligence and data visualization tools powered by AI technologies for small and medium businesses. Where do you think we are in this investment cycle, and what areas are still on tap for growth in your opinion?
Yeah, I think if you specifically talk about SMB, I think we're very early in that cycle. I think no doubt BI and data analytics have really made a lot of strides in many ways. A lot of interesting tooling have come up. A lot of platforms have come up to be able to ingest the data, what I call sort of the structured data, and then kind of basic analytics. But I think the next phase of kind of leveraging AI, and then giving mid to small businesses really the predictive power to run their business very effectively, we're pretty early in that cycle. SMBs is such a big part of this economy that probably 50% of job creation in the US kind of happens through SMBs. 40% of GDP is kind of driven by SMB. And I think, again, the impact of empowering that segment with true sort of automation and predictive elements is huge. And there are many, many ways they still can use this. And I think there are a lot of investments coming that way, starting from basically sales and marketing efforts. So think about what Shopify has done where, enabling everyone to, on the retail side, especially open a storefront and just kind of explode it. And all those businesses, are in the market selling the product, but then can significantly leverage, AI or machine learning to optimize sales efforts, marketing efforts, their inventory optimization, fulfillment, demand planning, supply planning, all those efforts, right? And I think, there's so much to do there for them to kind of leverage so that they are providing, if not Amazon, but Amazon-like or close to their experience, which is what every consumer expects this time. That's what Amazon has trained us for. Then things like, customer support, customer communication, leveraging chatbots and AI elements to that pieces. That's another complete wave of things that any SMB can leverage. Companies like Intercom have done a phenomenal job kind of, opening it up, but there's so much more that could be done and really providing these tools to the SMB in that sense. Hiring is another one where how do you kind of automate hiring or make the hiring extremely efficient for, franchises or smaller businesses and so forth. So there's a wave of things, small, medium businesses, they can leverage, and they're not going to be building these models, right? They're not sophisticated, but I think they're going to be more and more tooling, which gives them this out of the box functionality, which is significantly more intelligent than, what they have been used to today, which is also a big stride, but there's significant wave coming. So we're very early in that investment cycle to your question.
Yeah, we couldn't agree more. A lot of people focus on the enterprise as the golden ticket for a lot of these BI and data visualization tools because they have all this data and they have a use case for it right now. And maybe people think that SMB businesses individually don't have a lot of use cases and data to actually get value from these platforms, but aggregating all of these small, medium businesses together is extremely powerful. And there's a lot of data that they can all leverage off each other, which is really important. One of our portfolio companies, Aptio, based out of New York, has gone very vertical, focusing on SMB e-commerce churn, very niche, very focused. And a lot of people maybe think, okay, that's really too specialized for a predictive analytics tool. But when you aggregate how many e-commerce merchants are out there on all the different platforms, it is extremely powerful.
Yeah, no, I'll shamelessly plug one of our portfolio companies called Metrics, which is basically a platform built, which started around really enabling Amazon sellers and resellers around obviously marketing and sales, and then now really they've built a multi-channel solution across all the selling platforms like Shopify, like Walmart, like Amazon, and then providing that predictive optimization solution for SMB resellers around inventory, fulfillment, merchandising, planning. And that's just a starting point. I know they're expanding the product roadmap, but that's an example of how you could really help these sellers, be well positioned within Amazon, who otherwise would be very competitive to you.
Totally, absolutely. And so, talking about deep learning and machine learning, they're becoming more and more important to today's enterprise resource planning. But often the collection of data cannot be used directly for performing the analysis process. Therefore, the two techniques required are data preparation and data wrangling. What are your thoughts on these two solutions as a blocker to the democratization of data and analytics platforms?
Oh man, huge. I'll tell you, based on all my conversations, my experience, I think 80% of work on any AI project is preparing data. Yeah, it's like, that's like the bane of every data scientist or anyone, or rather a senior executive trying to deploy these things. And many companies aren't prepared for sort of the cost and work associated with, going in. They just want to do a machine learning project, kind of put stuff, and then they start realizing, oh, hey, where is the real AI? But then, all the stuff is, damn, there's so much work we're going to get there. And they just bail on it. So, from a blocker perspective, so many projects just kind of left in the middle, never see the light of deployment or production because, you have to really invest in the infrastructure on the data prep side to be able to do the modeling. And as I was saying earlier, yes, you can do a lot of custom modeling to your contextual use cases, but there's a lot of, phenomenal modeling out of the box available today. So that model development piece and model available, you can keep doing, but there's a good starting point for that available out of the box. But to get there, starting, there's so many pieces in that. Data discovery, data profiling, data structuring, cleaning, validating, enriching, building the governance infrastructure around it. All these steps and all these pieces to actually have a true sort of enterprise data used for machine learning is this, it's a huge pain in the ass. And then, talking about sort of machine learning projects, and then you have to go data labeling, then you have to go do metadata management, sort of data about data. It's a pretty big, heavy lift for many companies, and to add as a blocker to really use this. So I think, and there's a lot of work going on, but I think this is the area of high interest for me, and I know for many people, to kind of really leverage the full benefits of machine learning in real sense.
Yeah, if you say 80% of the problem and workload is in data prep and data wrangling, do you want to shamelessly plug any companies that you think are going to solve this?
There are many. Not necessarily all in our portfolio companies, but traditionally companies like Tamer and Paxata, which have been kind of doing a lot of data prep, data wrangling work in many ways. Large platforms like DataRobot, who obviously provide a lot of model building, but they do a lot of heavily on the early side of it. We have a early stage company called Conducto, which is kind of helping build this phenomenal data pipelines very effectively for especially data science type work. And then many more. I think there's obviously a slew of labeling companies like Scale AI and so forth, which are automating the process of labeling this data, to obviously solving use cases like autonomous driving, machine learning. That's, the amount of data prep that's needed to at that scale is a problem in itself. So yeah, those are some examples, and I can go on. This is a very wide space, and there's so many components of it that you can be building and so forth.
Which makes it very exciting to be an investor in, for sure, for the next several decades.
Totally.
So let's talk about some of the sort of inequality or diversion in machine learning and AI. What industries do you think machine learning and AI will affect disproportionately, either because they've been slow to adopt or there's just a lot of greenfield opportunity left?
If I were to pick two of the top, which have, either a greenfield or just, maybe a lot of opportunity either from adoption perspective, I would say one is healthcare. I mean, immense value creation in just from a humanity perspective, overall upliftment of human life perspective, and the potential that really machine learning can have. And it's a huge problem and multiple challenges of data collection, but just the impact is just huge. So, and it's probably fair to say it's relatively slow to adopt for a variety of reasons, structural, and many times obviously the privacy aspects of it, and many times, really how to put it to use. It's very fragmented, it's very localized, and many times where the data lives. But that would be sort of my top in many ways. I would say if I were to pick any other, which is I think maybe slower, is industrial segment. I think that's also a very significant portion of our GDP, and I think in many ways still living in the old school ways of improving their internal processes, and can really leverage these technologies that we have today to kind of improve the processes, improve the supply chains, improve the sort of general industrial performance. And I think there is a lot of progress there as well that has happened. I think, but we're kind of in an early sense where just about now most machines are getting connected, and there's a whole IoT movement which is making all that data available, but we're pretty early in that. And both of these sectors, I think, if you kind of think about overall GDP impact around automation, predictions, just significant value. Industrial goes wide, right? It goes to your manufacturing, to obviously your utilities, to then obviously I would call automotive and all autonomous as kind of all components of that industrial revolution.
Yeah, I would totally agree. I'd say healthcare is number one, which is really unfortunate that healthcare is number one, and it's probably the slowest to adopt, but maybe that's why we say it's number one. And interoperability is obviously a big problem that we're still trying to solve today, even though we've had, Google Health and all these things saying that they're going to try and offer these interoperability solutions to start letting the data go back and forth. But, HIPAA compliance is getting in the way a lot of the time. I'd also say probably agriculture is something that really needs help. That probably goes along the lines of supply chain and industrial. As more and more countries are starting to get more and more people relying on their local agriculture, and health is obviously connected to that as well, there's a lot of efficiencies that we can probably push towards that.
No doubt. Yeah, again, a very sort of global impact. And, I would agree in terms of where we are, I think that's the sector which probably has seen the least amount of investment and obviously have a wide ranging impact.
Yeah. Well, I mean, a lot of people are investing in robots and stuff to replace the humans for that, but not in terms of actually the collection and sharing of data for it.
That's right.
So, you talk about this in a recent blog post, I believe, but the need for automation has come to the forefront for back office finance professionals like CFOs and COOs and other division leaders. Now, with the shift to a more distributed workforce, how do you see the role of CFOs and COOs changing in a post-COVID world as it relates to data and analytics platforms? Yeah,
I think obviously both for CFO, the common theme is, automation, right? It's more and more automation at the center of it. But if I were to kind of segregate out, right, I think for CFOs, COVID time period, and I'm talking mid-COVID versus post-COVID, I think it was a little bit of a blocker, right? Because CFOs are working on a lot of strategic priorities. COVID kind of put a stall, all hands on cost and budgeting and really focusing on their optimization. But then I think what it did is really uplifting and increasing the focus of a CFO on strategy versus really tactical stuff, and what I call the rise of a strategic CFO, which is not new, but I would say accelerant. COVID will be an accelerant for that kind of mindset where we have to think and plan from a business strategy perspective, the whole sort of financial organization and our financial processes and our financial infrastructure to be able to be nimble to manage these kind of movements relatively efficiently. And that starts with, I guess the two common themes. One is automation, and second, again, analytics, and more use of both these things of really automating, commodity day-to-day tasks and freeing up the CFO and his and her team out of those tasks, and then really enabling them to focus on forecasting, strategic decisioning type of efforts. So I think I would say that, both these elements are extremely sort of integral to how they're going to, hire CFOs who actually have a strategic mindset and are able to kind of do these things and so forth. For COO, I think COVID was an accelerant on everything, because COO role, and depending on the company, it's different. It was all about process. And man, talk about process that got disrupted by people not being in offices, and then them realizing every single project that they had put on hold, they're like, I got to do it now. About digital transformation, process automation, any move from physical to digital strategy or analog to digital strategy, just totally accelerated. And I think the world of analytics and data, to me, it all comes down to how do you do better and better automation. Some of the automation is just pure process automation. Some of them is more predictive abilities to kind of bring some automation of taking some human hours out of it. But for COO, ranging from obviously RPA movement to maybe the next stage of intelligence automation, which is leveraging a lot of unstructured data and bringing human cognition in many of the common tasks. Those are going to be the first-hand pieces that I think most CEOs will be thinking about, especially the enterprise scale for sure, but then also mid-scale companies.
Yeah, I think you're absolutely right. I think the COO was the most vital role during COVID that everyone was relying on. I mean, everyone basically became a COO. CFOs, CMOs, CPOs, they all started looking like COOs because they all started to need to really analyze their operations and really understand their efficiencies and productivity. Right. So that's really interesting that you say that. And I think also people were able to take a pause on some of the strategic initiatives that were probably longer term, and they were kicking the can down the road on a couple of the, tech upgrades they needed to look at, communication upgrades they needed to take a look at, and they pushed off those pitches from a lot of customers. For us in our portfolio, people were saying sales cycles were going to be longer for enterprise customers because they were focused on other initiatives. But we actually saw the reverse. We saw more conversations happening with enterprise leaders at the C-suite level who are now taking the time to have the meeting, have the pitch, and rethink about upgrading their tech stack while some of the other larger initiatives were put on pause just because of COVID.
Yeah, no, absolutely. Same for many of our companies. Obviously, we were all thinking and rethinking about the portfolio at the onset of it. But I would say net majority of our companies were a huge beneficiary because all of them by design are in the technology space, enabling either some digital movement or digital transformation aspects at different level. And net every one of them. The Benchprep I was talking about, think about learning spaces. Every single physical learning space company, their business is shut down. And anyone who's maybe thinking about the digital strategy is coming to them and say, hey, how can I go live tomorrow? And that's just one example of many other companies that in our portfolio who severely benefited from this.
Yeah, well, keeping on the same vein as an impact of COVID, in your opinion, how has COVID impacted cybersecurity and data infrastructure requirements for SMBs, especially with the increase of remote employees working from home?
I mean, cybersecurity, it's kind of an interesting evergreen beast that just continues to, evolve and grow. And any tectonic movements like COVID and so forth really, further enhances the need to have a solid cybersecurity solution for all segments, starting from obviously large enterprises to kind of SMBs. I mean, in COVID times, you're home and your email usage, your infrastructure usage, in a home setting, which is not your office, security perimeter just ramped up significantly. So you're obviously more exposed to every setting. So now thinking about managing a very different kind of endpoint and managing a very different kind of attack vector totally, created the need for serving this kind of, remote working setup for SMBs, for mid-market, for enterprises. And you can look at it from many ways, but I think, the biggest, for our investments and thesis was one of the larger attack vectors is email. I mean, everyone touches email. That is so central to it. And email is a multifaceted problem. It's not only a infrastructure type setup problem, it's also a social engineering problem because most of these emails are, these phishing scams which are kind of, talking people into revealing them information. So, to me, the notion of old school sort of antivirus has evolved to this new age, very sophisticated, phishing products that are needed for every single company, especially SMBs and then mid-market and enterprises. And we have a business called IronScales, which is phenomenal sort of machine learning powered, crowdsource powered platform serving specifically the cloud-based email security market. Other than that, I think generally, the cloud usage and then either through directly by using cloud or using all the applications that are in cloud has basically completely given to the rise of cloud security platforms, right? And cloud security was a relatively newer attack vector where people are thinking, hey, I'm running still a lot of my workloads on-prem with some some compute type pieces in the cloud, and that has completely shifted. And then all the infrastructure that cybersecurity infrastructure that exists largely for on-prem. And then now everyone is kind of evolving to serve a cloud-based infrastructure, which is working with the cloud providers, working with the multi-cloud providers, in many cases working with multi-cloud and your hybrid setup in one setting to combine these attack vectors and then serving a security solution. And I say all these things because they were all important in general anyways, but COVID has accelerated and exacerbated, the need for these two or three very specific, situations. So I think those are maybe some of the examples of, how cybersecurity has evolved significantly in last, I would say, 9 to 12 months.
Yeah, I mean, it's like what we said prior, COOs and everything, you couldn't ignore cybersecurity any longer, even though you had probably for the last couple of years pre-COVID. During COVID, it was not an option for a lot of C-suite executives because they were being asked by their boards as well, what's your, security infrastructure plan?
That's true. And security at the enterprise level has always been, at the center point, at least for the last couple of years, and increasing so. But, a lot of folks at the, in the mid-market or even small businesses might not have been as much focus on it. And I do think that this situation has exposed them to a lot more attacks. We hear about, county attacks and school attacks, places where you wouldn't think attackers would be really focused on, but they are. And so everyone is kind of, I think, bringing the cybersecurity agenda forefront.
Yeah, how do you think early stage companies should be thinking about their sort of SOC 2 compliance and their cybersecurity stack when they're still getting ready to sell to, SMBs and enterprise?
Yeah, I think it's an important question, right? Because on one end, depending on the size of the business, right? Because one end, it is an extremely important infrastructure setup to achieve and then obviously run the business. But I know for a lot of smaller businesses, it's a big administrative burden to kind of go through that process. And I think, if your business requires to be SOC 2 compliant for serving your customers, you don't have a choice at this point. You have to do it, and you should do it because it serves you better, it serves your customers better, and so forth. But there are many sort of, if that's not a must requirement, there are kind of middle alternatives where there are a lot of very interesting tech companies that come up, which will get you, not necessarily give you the certification, but help you prep up to that place, kind of build you the basic infrastructure, build you the right security checks to get there. And on one end, there are these SaaS management type solutions, which kind of expose and aggregate your security, viewpoint. Then there are companies which they're built for getting you SOC 2 compliant ready, but they're not giving the certification themselves. But in the process, they're really enabling you to get to the point whenever you want to go and take that step. So I think there are intermediate steps that companies can do and should do, because I think overall it elevates your profile as a company against your competitors, and then obviously gives you credibility with your customers.
Those are really important points to share for startups and founders out there. So, organizations have been using natural language processing for text analytics to identify patterns in data such as social media sentiment and contract review. But NLP usage has been expanding. The big change is the amount of context and understanding that can be extracted when understanding documents. What are your thoughts on NLP being used for predictive analytics?
Yeah, I think NLP, out of all sort of machine learning subsegments, is the one which is, I think, we've made the most progress on. It's probably the most advanced in many, many ways. And then obviously have the most, open source, but then also support from large tech tooling out there. And I think it's at a point where we're already seeing it in many, many use cases, ranging to, as you mentioned, on legal tech. And we have a business called LinkSquares, which is phenomenal around this contract analytics ecosystem, to obviously using it in chatbots, to be using your conversational intelligence, and to be using for internal document extraction type purposes. And I think that's one area where I think we've made the most progress. And I think in many cases, it's very sort of enterprise ready for deployment use, and we're seeing the benefits of it. And that's my thoughts. I think for using it for predictive analytics purposes, I think that's kind of natural, where once you're doing the document extraction and so forth, you're able to get more and more data, to your point, which is the data that might not even be available to you, as we were talking about data prep earlier. So NLP enables you to extract that completely hard to get data, which is not in structured form, which enables you to then build even more intelligence that you were not able to build it earlier. So in a way, it's a significant enabler to then completely enrich your intelligence even more in many new ways that maybe was not as efficient earlier.
So it's a logical next step, is what you're saying, for those companies that may not be sitting on troves of data, who can start to use NLP to start collecting it, organizing it, and then running their own predictive models on top.
Oh, totally. I think we talked about process automation, and I've seen so many companies, gain so much funding, and a lot of companies have been actually on the bandwagon of using, call it robotic process automation. The next evolution in that market, which is, I think, even a bigger market, because 80% of your documents are unstructured content. It's sitting in documents. Using NLP to extract that information using this next wave of I call intelligent automation or intelligent process automation, and then take the data out and then use it for multiple things. Obviously, enrich your processes and enrich your process automation, but then make that data available in structured form for building more and more intelligence and building more predictive analytics. I think that's the next wave, and we are just at the starting phase of it.
Yeah, very exciting next wave. And we're looking at those companies as well. So I'd love to move to my favorite part of the talk, which are your book recommendations. And you have two amazing books here. Can you tell us about each one of these and why the audience should give them a read?
Yeah, I mean, the first one is really one which I kind of read again and again as I'm going through different phases of my life. It's a book called Mindset: A New Psychology of Success by Carol Dweck. And it's a very interesting read because it's not very sort of tactical. It'll kind of ask you to come at a very high level and think about your own mindset as an individual. And Carol introduces this concept of fixed mindset versus growth mindset. And really what she's trying to say is that either you're in fixed mindset where you basically have kind of told yourself that these are my abilities and I'm going to just live within that and kind of optimize my life around that. And then by design, I think when you do that, you'll kind of put your constraints around yourself. I think the outcome, will be lower than that. Versus in a growth mindset, you are constantly challenging yourself. You're constantly pushing yourself to be the next, moving up or directionally in a different way. And she offers some strategies. She offers some frameworks to how to kind of move from one mindset to another. But it's thinking about either you're an entrepreneur starting a company, or you're an executive in a company, or you're a very young out of the college graduate, to kind of orient yourself to really think about this of who you are. How do you think? And then maybe gives you framework to start pushing yourself a little bit more in a better way. So it's a phenomenal book. And I think in our cover, she talked about this could be applicable in parenting, in business, in schools, in relationships. Every piece, it's about what is your mindset, and just a phenomenal book in that sense. The other one is The World is Flat. I don't know how known or unknown this book is, by Thomas Friedman. It's kind of controversial in many ways, and that's why I like it, because this is when introduced the concept of how the world is really, becoming a level playing field. I think Thomas made a trip to Bangalore, saw the movement of the BPOs and the call centers, but then a lot of outsourcing movement of commodity, but really high level tasks. Nurses and even teledoctors and so forth, to come to the conclusion that the world is going to become pretty level playing field for everyone. And then he introduced a bunch of concepts around. I think he had a concept around Dell's theory of peace or something, which I don't recall the exact, but the larger concept was if the corporations have large supply chain dependence between two countries, those two countries will never go to war because they have so much of interdependence on each other. So by design, this technology and the world become flat is making the world a better place and introducing this concept of peace. So I think I just like it for, kind of very early on. I think the book was in 2005 or something, talking about how the world is, being connected to each other and the amount of dependence. You can argue, I don't know if the world is really that equal or the world is really that flat, and there's a lot of rebuttals to that. But I think it's just a good early sort of controversial kind of topic to think about, and something he presents pretty nicely in a very global setting.
Yeah, absolutely. Those are two great books. I think about when I, hear you say about mindset, it's like being comfortable with this thought of being uncomfortable. Stepping into the unknown is what a lot of growth leaders have as their strengths. And I love how it applies to parenting as well as business and relationships. And then The World is Flat. I mean, it definitely is a national bestseller. People know about it, but I don't think a lot of people have actually spent the time to sit down with it. So I'm going to probably read that over the holidays this year. So before we wrap things off, we always ask for any final words of inspiration for our audience.
Yeah, I think, again, I'm going to use Carol's, book again, because it's been, such central to the way I think about it. I have a vantage point of being in a phenomenal job, which gives me access to these amazing entrepreneurs who really put everything on stake and go start a company. It's a really hard thing to do. And one thing I'll say is that everyone amazes me, and most of them tell me that they have amazed themselves by stepping out of their shoes and then taking a new challenge and going with it. And the central piece of all of them is that, the ones who are really successful, they always manage the to combine their passion with then the challenge they take. So you're going to take a big challenge, but if you're passionate about it, you actually love what it is versus just for the sake of doing it. You're actually not a entrepreneur, but an entrepreneur is the way I say it. There's a significant, high degree of success that you can get, if not in monetary terms, but also in learning purposes. So I drive my inspiration from these entrepreneurs who are kind of doing these things and taking the hardest challenge. What I'll tell audiences, having seen this, there is no one shape or form this entrepreneur is. All of you have some element of that within you. You just have to kind of find it, and that entrepreneurship come in the shape of starting a business, starting a project, doing something new with the family. But you got to keep pushing yourself, and should never be thinking that there's a limit to what you can do, and should be in that growth mindset.
That's awesome. That's a great way to end things off, and a great way to live your life. Thank you so much for joining me in the tank today and for giving us your thoughts on the democratization of data analytics and machine learning.
Absolutely. Pleasure to be here, Matt. And thanks for having me.